Good morning, everyone, and thank you very much for joining. This is the morning market review. It's Tuesday, it's the 10th of Jan 2022. My name is Russell Shaw, I'm a senior market specialist at FXCM. My email address is rshaw@fxcm.com. And I'm just going to bring up our high-risk investment warning. I'll keep this on screen. May I just double check? Can you guys see me, hear me, and can you see the screen? The three checks. Okay, excellent. Thanks, Joachim. Awesome, Derek. Nice. Okay. Hey, Kubus. Anna, nice to have you. Shadrach. Hi, David. Nice to have you. Nice to have you all on the webinar. Let's just bring up the market commentaries disclaimer. Hi, Edward. Nice to have you on the webinar. All right. Hey, Howard. All right, let's go through to trading view. This is a chart we've been using for a good few months now, and I think it's really helped us a lot. We've got the real rate here on the top chart. The real rate is the US 10-year minus what we call the break even. You might have heard of TIPS, Treasury, inflation protected securities. This looks like a flag. It looks like a flag. And it looks like the real rate is breaking down. Now we've got to be we've got to be careful here, because the idea is that the Fed has completely negated any, at least according to the last minutes, negated any likelihood of a rate cut for this year. But the market is seeing a pivot. It's seeing the rate cut, and you can see it's breaking down out of this flag. And what we've got here is a correlation coefficient between the US dollar. Okay, so this middle chart's the US dollar. This is the real rate here. And hey, Kath, nice to have you on the webinar. What we've got here is a very interesting dynamic that's happening. So the correlation between the US dollar and the real rate has been very strong for 2022. Coming into the end of 2022 into 2023, the correlation actually broke. What do I mean by that? I mean that as the real rate started moving up, the dollar actually didn't. The dollar was moving sideways. The reason that it was moving sideways is because it's not only influenced by the US side of the equation, because it's a currency, so euro to US dollar, pound to US dollar. So it's going to be affected by the spreads between the relative rates between the two regions, and the relative strength has been on the European side of the proverbial pond, so to speak. But what's happening here is that you can see that the correlation coefficient is starting to reassert itself. In other words, the breakdown in the real rate seems to be accompanied by a breakdown in the US dollar. Okay, now that's very interesting, because if the dollar is going to follow the real rate down, and if the real rate is, if there is going to be a pivot. So at the moment, if you take a look at the Fed funds futures, there's a sort of a parabola, there's a kink, there's a turning point, and that's round about in June, but the markets are forward looking. So it seems as if the markets are starting to anticipate that pivot. It's going to be subject to data, and we're going to get inflation data on Thursday, so that's going to be very important. So we're starting to get the calendar ticking along. Thursday's the big day for this week, and then, of course, Friday we're going to get the earnings. We're going to get Q4 earnings. All right. So just bear that in mind, in that the real rate's breaking down, and that the dollar seems to be moving with it, and that's going to help us with our analysis. So I want to do a few charts here. The first chart is just a chart of interest, and this is the China 50. This is a monthly chart, so we're looking at a very long-term view here. We're not going to get into much analysis on the China 50, except I want to show you that it's moved from the bearish channel. The bearish channel is the lower blue, lower red. It's moving into the neutral channel. That's between the two blues, right? This is a monthly chart. It's only the 10th, so we've got another 21 days to see if we close in this neutral channel. But it's moving from weakness into neutrality. That's a relative movement of strength. Take a look at the RSI. We need this RSI to cross above 50 and hold. But I think that China 50 is one to keep an eye on for 2023. It, to me, seems to perhaps be a dark horse, and want to keep an eye on that. If you go down, let's go down to the lower time frame. So I'll just go through to the daily here. You see that we've got a squeeze. Okay, we've got a squeeze here in the Bollinger. Well, what is a squeeze? Price cycles are close to impossible to really forecast. Volatility cycles are more amiable, so to speak, to forecasting. So you've got the squeeze. The squeeze in the Bollingers is the proverbial calm before the storm. Well, it's expanding now. So you had that squeeze, it's expanding, and you can see that the China 50 is now on the daily is actually in the bullish area. It's in the upper red, upper blue. So that's very interesting. We'll go down to the hourly here. You can see that the EMAs are just about across. They've squeezed together. I wonder if we'll get across. The stochastic's already crossed. So we're looking for one more signal here. Now, if we get that signal, it doesn't mean necessarily that there's going to be a swing. What you've got to look for is the stochastic to get to the to its upper quintile, to get above 80. Now, there's no overbought, oversold on the stochastic. I know some tech say that there is, there isn't. If you take a look at the formula for stochastic, it doesn't make provisions for overbought, oversold. It makes provisions for momentum. So once you get through to the upper quintile, there's probably going to be a nice swing. So this is one to really put into the watch list. Anticipating the pivot that the Fed says isn't going to happen. Yeah, so the Fed says it isn't going to happen. The market says it is going to happen. Who's going to be right? Well, we'll have to wait and see. The Fed doesn't have a good track record over the last few years, and we know they don't have a good track record. When I say the last few years, the last 2 years, what was their big was their big call that inflation was transitory, which we know was completely incorrect. The market was right there. The Fed was incorrect. I just wonder if that's the same play that we're seeing now. Fed desperate to cling on to credibility, and I think that trying to cling on to that credibility is making them overtly hawkish? Question mark. What do you think about that, Anna? All right, let's take a look at the DAX. Similar analysis, okay. All right, so this is a terrific looking weekly chart. The DAX has got a trough, peak, higher trough, higher peak. That's an uptrend. Now, it's not just an uptrend, it's an uptrend on the weekly, okay? That's a primary trend. Take a look at the RSI. That RSI is now over 50 and it's just holding that bullish area. Anything above 50 is regarded as bullish. There's a nice momentum on the weekly chart, okay? If we go down to the daily chart here, take a look at what's happening here. This is a really interesting look. We are in the bullish channel. That's the upper red, upper blue. Take a look at your RSI. RSI does make provision for overbought. Stochastic doesn't. Okay, we're not overbought, but we're bullish. Terrific. What's the other attribute? Look at these Bollingers starting to push away. So there's a volatility building up whilst the candlesticks are hugging the bullish channel. That's really good looking. Okay, and if we go through to the hourly chart here, all right. So now we can see we're getting a potential crossover here. Okay, it's a dual trigger system. We want the stochastic to cross here as well. If we get the crosses, those are the two triggers. But in order for us to get a swing, must get the stochastic up till 80 and hold. See, when it gets up to the 80 and holds, over here, go to the 80 and holds, that's where the magic happens. That's where the swing is. Okay, so we've got to get the crossovers, okay, and then we've got to get the momentum. Now, because we can't guarantee the momentum, must have a stop loss and risk management. Okay, and you can see that the central pivot is acting as resistance at the moment. Is a disbelief and wishful thinking after decades of falling interest rates? I don't think so. I don't think that we're going to get close to the zero bound again, but I don't think we're going to get to 15% either. I think that the inflation story, by and large, looks like it's under control. So you want to carry on raising interest rates into an environment that's looking like it's under control? Seems foolhardy. So we just have to. We'll have to just see if the CPR data moderates. Look at that median CPR. That's really the key. We want to see that rolling over. Must roll over. Okay. Let's go through to the euro now. Now remember, US dollar is starting to reconnect. US dollar is starting to reconnect with the real rate. That real rate's starting to look like it's falling out of a. Looks like it's starting to fall out of a bearish flag. This is the weekly higher trough, higher peak, higher trough, higher peak. This is quite a tricky chart. I just wonder where this correction is going to be in. Theoretically, if we have to be very strict, we could count this as a correction. Why can we count this as a correction? This candle here has actually got a lower high, lower low. So that could be the correction. In other words, this may be the next higher trough. I'm not too happy with a one candle higher trough, but what you can take a look at the RSI, it's just swimming beautifully in that bullish area. There's no doubt that euro US dollar is in uptrend, higher trough, higher peak, higher trough, higher peak, possibly higher trough. So that's what the question mark there. If you go down to the daily, and it's gone into zone 1. Zone 1 is the bullish area. Okay, it's the upper red, upper blue. Take a look at the volume starting to pull away. See that? So we're starting to get a momentum build here. Starting to get a momentum build. Now, we've got to be very mindful of whether the candlesticks stay in zone 1, whether they stay in this bullish area, red, upper blue. And of course, take a look at the RSI. Is just absolutely maintaining the bullish area. There's perhaps a little bit of a dip here, and we dropped into zone 3, into the bearish area. Well, the jobs data and the services PMI made that very, very short-lived, and we're back into the bullish area. So the bullish area here is holding up quite nicely. Go down to the hourly, okay, and we're going to see if we're going to get the central pivot to hold, and if we're going to get the RSI to cross as well. So we need to see the two signals. That's only part 1 of the equation. Part 2 of the equation, do we get the momentum set in? Must get the momentum. Without the momentum, there's no swing. We don't know you're going to get the momentum. Must use stop losses. So take a look here. This is a really good example of a nice momentum, beautiful swing. Okay, so that's kind of what we're looking for here. All right, let me just see if there's any questions I'm missing. I'm using two monitors, so if I'm not looking directly at the camera, I'm looking at the other monitor. All right, let's take a look at the pound, and I think we will call this the last one for the day, unless there's any others you can type in. But take a look here. We can get rid of all of this. This lower peak, low trough, low peak, low trough, low peak, low trough. We can get rid of all of that. So what we'll do is we go here. We can remove all of these guys. Okay, and what we can do is we can start the labeling from here. Here's your reference trough. Okay, here's your reference peak. Again, it's quite a tricky one because it's just a single candle peak, but it doesn't matter. In terms of the subsequent price action, there's no doubt we get a higher trough, followed by a really strong swing higher peak. Now this is where it gets really interesting. Take a look at this. Higher trough. I'm going to put a question mark here. Why question mark? Because we'll only note the end of this week, and you can see that the price action is looking pretty good, but we needed to close above last week's high. Okay, and you can see that the RSI is above 50 in that bullish area. Okay. PJ asking for pound Japanese yen and US dollar Japanese yen CAD. Yeah. Okay. Just take a look at the daily here. So the daily, we're trying to move back into zone 1. I think we need a little bit more. I think we needed a little bit more here on pound US dollar. Let's just take a look at the hourly. It's pulling back, maybe a pullback is fine, but you can see that the daily chart here is in neutral, so really giving us much there. US dollar Japanese yen, I really don't like this pair. I'm just saying that to be transparent. There's huge Japanese manipulation happening here. So what's happening with this? The US dollar is dropping. Let's get a momentum reading first. Okay, so you can see that there is a bearish momentum. What is the trend? Remember, we're on the weekly trend here. Let's put in the trend. We've got a peak. Got a trough here. Got a lower peak here. And a lower trough. Okay, so the trend is down. Okay, so manipulation aside, let's go down to the daily. And you can see that daily, it has been hugging the bearish channel for quite some time. Lower blue, lower red, but we're in neutral at the moment. Okay, it's not giving us much at the moment, Kath. We really want sort of the momentum to be behind us. I think there's better key pairs, just sort of my opinion, but if we have to sort of put a trend to it, the trend's down, the momentum down, it's just sitting in no man's land at the moment. All right, PJ asking for pound Japanese yen. Let's take a look at that. So pound Japanese yen is not one that I look at all that often. It's a very fast-moving pair. Got to be very careful with it. Let's take Kiwi out. It moves very quickly. So you've got the same issue with pound Japanese yen. You've got the Japanese, which are really just manipulating markets at the moment. The way they're doing is they're defending 50 basis points on their 10-year. This is it's a tough-looking chart. I think let's lay it as follows. Here's a peak. Okay, so that's the obvious starting point. Here's the trough. There's a little bit of ambiguity here, but I think that in the spirit of the way the price is moving, we can put a lower peak there, and we could put a lower trough here. So it's trending down. So a pound trending down against Japanese yen, but you've got a huge amount of support here. It's a really messy looking chart. Let's go through to, okay, so this breakdown over here. So we're going to the 17th of the 12th, the week of the 17th of the 12th. Okay, so kind of like hangs in zone 3 there, the bearish area. But again, it's pushed into neutral. It's sitting in no man's land at the moment, PJ. So, I mean, it really comes down to one's approach to market. But to me, this is not a clean chart at all. The trend here is tentative at best. It just looks as if it's pushing sideways. Again, not one that's sort of, I think there's better looking charts out there. I hope that helps. All right, any others? Any others there? All right, I think let us wrap up at this point. I want to wish everyone a good day, a good evening ahead. We're going to do this again tomorrow morning. Please join me for that. Thanks very much, guys.